Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, the outlook for 2026 is full of uncertainty, so is there any good news? And Calgary's water main break highlights a common problem across this country. Plus, is capital increasingly wrapped in the flag? That's all ahead. First, for the week that was in business, it's time for the briefs. The federal strategy for autos in Canada includes $3 billion for the industry to adapt and $2.3 billion in incentives to buy electric vehicles. New EV targets aim to be at 75% of total sales by 2035 and 90% by 2040. And the government says new trade agreements will bring additional manufacturing here. A new report highlights a dramatic decline in the share of cars in Canada being made by U.S. automakers, as the proportion of auto manufacturing by Japanese companies has risen. The Trillium Network for Advanced Manufacturing showed that overall the number of cars assembled here dropped from 2.3 million in 2016 to 1.2 million in 2025, and that much of that decline was from U.S.-based auto companies, Ford, GM, and Stellantis, which made 56% of the cars in 2016, but only 23% by 2025. The U.S. is creating a critical mineral reserve worth about $12 billion to create a stockpile and ensure supply of the sometimes rare and hard-to-process minerals. Project Vault will be funded by the U.S. Export-Import Bank. China controls about 70% of the world's rare earth mining and 90% of global rare earth processing. Canadian mining firms Eldorado Gold and Foran Mining will combine in a $3.8 billion share swap. It comes as the prices of gold and silver had risen sharply, even with a recent sell-off in the precious metals. Eldorado has a massive gold and copper mine under construction in Greece, while Foran is starting to work on production of a gold, silver, and zinc mine in Saskatchewan. On time and under budget are not words we normally associate with big projects, but Ontario's refurbishment of the Darlington nuclear facility appears to be both, with the fourth and final reactor ready 4 months ahead of schedule and $150 million under budget. Darlington is also charged with developing 4 small modular reactors adjacent to the station. And those are your business briefs. Canada's economy isn't expected to sizzle in 2026, but could improve as the year goes on. Of course, it's an outlook that comes with some caveats. Dawn Desjardins is Chief Economist of Deloitte Canada. Dawn, thanks for being with us.
Oh, thanks for having me.
It's the caveats I want to start with. You saw the Bank of Canada with the uncertainties risk writ large. How do you forecast? Because you are saying maybe a slight pickup towards the end of this year into next year, but there's an asterisk on that, of course.
Absolutely. And really the big asterisk is our assumption about keeping access to the U.S. market at relatively tariff-free rates. Now, obviously not in some of those bigger sectors that we are really being impacted with, but nonetheless, we are making that assumption. And as you say, it is a big one. And we do assume also that we will see some traction in terms of some of the government policies that have been announced are going to be put in place.
And what are you watching for specifically there? Because that, of course, we've seen a lot, and there's things like Buy Canadian, changes in procurement. You would hope to see things reasonably quickly. Infrastructure, of course, can happen pretty quickly. Is there anything that you're really watching closely?
Well, it really is just getting some traction on these announcements and these programs, whether it is the Port of Montreal, all of these different components. I think we need to see something happen so that businesses who right now are feeling very unsure about where they should be investing, if they should be investing, that they'll take that as a signal, and that will help with getting a little bit of that money into the economy, because as we all know, that is one of the areas where we have been really lagging in terms of money being spent.
One thing, of course, with money being spent has been the slow pace of business investment. Businesses like certainty, Dawn. They want to know an answer to what does the next CUSMA iteration look like. Do you think we get that? Are you kind of counting on some kind of resolution to those negotiations this year, this summer even?
We are actually. We think that we're going to have that deal, whatever it's going to look like. I'm not saying it's going to be the same as we have right now, but we do think that given that a lot of U.S. companies rely on Canadian goods to feed into their supply chain, that we will see a deal being struck. Now, whether or not it does have some caveats or some changes. And we know that even if we do get that deal signed or the review signed, anything can change. So I think from the perspective of Canadian businesses and what they're thinking about, they're thinking about where a rate's going to be. And also, can they actually kind of piggyback, if you will, on some of the government's spending initiatives. So that too, all of that kind of has to move in tandem, I think, for us to actually see that money being spent by businesses.
Are you worried about the government spending and the level of debt that includes and the costs that come with those, deficit spending?
I usually am, but at this stage, I have to say, I think we need the infrastructure being built. And when we look at some of the metrics that say, okay, what suggests that we're not in a great fiscal health? Well, if we think about debt service as a percentage of our revenues, for example, government revenues, that number is running at about 10, 11 cents. When we were really worried about it, it was about 38 cents. So I think there is still fiscal room for the government to continue to spend, to get us up that curve. And hopefully, and I'm thinking this is going to happen, restore confidence by Canadian businesses.
Is there room in forecasting for a best case scenario, the upside surprise that could come?
Yeah, I mean, there's always hope. When we think about our forecast for 2026, I mean, we're not looking for a huge surge in activity. What we're looking for is growth of about 1.5%. It's going to be, in our view anyway, a soft start. So growth rates that are running 1.25%. So not all that rosy. It really begins to pick up once we get some restoration of confidence. And it's confidence for businesses, but that flows through to the consumer as well, because the consumer, is also facing a lot of uncertainty, soft job market. We do know that lots of Canadian mortgage holders are going to be renegotiating in 2026. So there's all of these factors at work. We do think that will, once we get this confidence being restored, we do think that will set up for stronger growth. But again, I think when we think about 2026, we're not going to look back and go, oh my goodness, that was such a strong year. Is there a risk? Sure, of course. If we somehow get some kind of amazing deal that the U.S. just signs off and we're back to where we were before, sure, that could be that confidence lift, and it could come a little sooner.
So good to have you, Dawn. Appreciate your time today.
Thank you.
Dawn Desjardins is Chief Economist at Deloitte Canada. Coming up, with another water main break shutting down its system recently, Calgary became the front line of the Canadian municipal infrastructure deficit. We've got the Mayor of Calgary on what happens now.